Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 17th of June, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, the overnight fairly quiet. Um, this morning we got the May housing starts number came in at slightly better, 1.164 million versus 1.15 expected. Um, Other than that, really, there isn't all that much to report. Fed's Bullard came out about 2 hours ago and said the economy's stuck in slow growth mode. Only one more rate hike may be appropriate over the next 2.5 years. Over the next 2.5 years. So that's how things are shaping up right now. Um, my my voice is a little bit scratchy, so I might lose it here at any time. Uh, I'll just put you on mute and come back. The biggest thing, of course, standing in the way here is the EU referendum on the leave versus remain for Britain, which takes place next on the 23rd, next Thursday. Oil's picking up a little bit. Oil's, for those who didn't know, oil's trading August now, August 2016. It's trading 47.74. It's up a dollar or 2%. It's been falling off steadily over the last few days, and it's finally picking up a little bit. If you're seeing a large gap in your oil chart, that means that um, the rollover has taken place and you have not back adjusted your contracts. As far as what we're looking for today, the calendar is pretty clear. There's not much here except for ECB Speaker Draghi expected at 10 a.m. Central, 11 a.m. Eastern, speaking in Munich, and he'll be pre-releasing his comments to the press. Baker Hughes rig count at noon Central, 1 Eastern. Other than that, it's a pretty quiet day. It's a beautiful day here in Chicago. It's warm. It's 84 degrees, which is about what, 25 Celsius or 27 Celsius. Um, and I expect the day to kind of get quiet fairly early. So that's how things are shaping up as of right now. Let's switch gears and look at what was expected yesterday versus what we got. Where is that chart? Hang on, there it is. Here we go. This was the primary hypothesis yesterday. If you're interested in how that hypothesis was arrived at, I keep those videos up there for everyone to see at any given time on my YouTube channel. Yesterday, while the trader bite was going on, we looked for an open at 51.50 in the 2051, or it was trading at the 2051.50 area. We were looking for a choppy open, then a responsive attempt, and then immediately we're looking for the big move we're looking for was 42 tests. And remember, there's confluence, multiple multiple composite volume-based confluence at 2042 down to 2040.75. I've pointed that out since I think late last week or early this week that if the buyers cannot hold above the 73 and a quarter, that it's a high probability play, and that's a statistically high probability play that the high volume node, which is also the point of control, this is the 2042 area, is the most traded price on a back adjusted basis since October 9th, 2013. This is the date right here for when this composite was created. October 9th, 2013, that was the last major swing low. And so this is the most traded price in the area. We've been stuck at this price before for a long time. So we got a test of the 2042. That was the primary hypothesis, is to test up and then come down to it. The secondary hypothesis is to open open down, move towards the gap zone, potentially to the 2042, and then push back up into the prior day's range, and with the point of control of this composite being the extended target. The initial target would be this LVN zone that I put a box around. That's where I stopped the arrow. So I was looking for 2069. The extended target would be the point of control. Remember, we moved outside of this microcomposite zone, so we're looking for any movement back into the composite zone that holds the range is likely to test the point of control right here. And that point of control is in the 2072 range. So that's what we got yesterday. We got basically um, a play on hypo 1 and 2. Uh, the market opened up and it fell immediately, which is hypo 2, pushed right down to 2040.75, which is the lowermost point of control here, the 2-day balance from the 23rd and the 19th. Pushed right to it, to the tick, closed this naked point of control, touched and closed the major uh, uh, composite point of control and the microcomposite point of control, and then we moved back in. Note the pushback, the pullback to the mid here, and VWAP, and then we get an impulsive move up, and we're looking for the continuation move. We get the continuation move, and where does it stop? Right up against that MC point of control, which is the extended target. Yesterday's range was a little bit wider than normal. But overall, the auction was fairly orderly once we got back into the MC range. If you don't understand any of this stuff, I advise you to just look at the glossary to get familiar with the terms. Just hang in there, watch over time. It starts to percolate, and by the process of osmosis, make its way through. If not, then check out the videos on my website, on the archive, the free videos. There are tons and tons and tons of webinars for you to watch. So that's how things ended up. So what do we get today? Given the way we closed yesterday, let's zoom in a little bit to see. This is the 2-tick Renko chart. I've lost my OS here. Let's get rid of these. So you see that based on the profile that we left behind yesterday, essentially we moved from MC point of control to MC point of control, and the market has tested both sides. Note that the profile has no consensus in it. In other words, there's no Gaussian curve, there's no fatness or bulk or kurtosis in the profile at all, which tells us that it could not find the opposing force and it could not find balance. When the market cannot find balance, what does it do? Take a guess. What does a market do when it cannot find the opposing force that it's seeking? What it does is it continues in the direction of the move. So if we cannot find sellers here, then we're going to pull back, entice more buyers in, then we're going to push for sellers a little bit higher. Can't find them there, pull back, push higher. Are there sellers here? No, we don't see an excess high. We don't see the market rotating back. We don't see volume drying up. Therefore, we continue higher. And so we close by shifting the point of control all the way to the high end of the range. This is a neutral extreme day going the opposite way. This was the day before. The Wednesday was a neutral extreme down with the continuation. The continuation in the auction is complete. We don't see this as often as I'd like, where the auction just proceeds in an extremely orderly fashion. And what we had yesterday is we broke the IB low to take out our main target. The red line you see there, that was there all week. and then it broke the other side to go neutral, and then it pulls back to the mid here. The mid trade had about 5 ticks of heat. That's it. And then it pushes and it closes on the extreme of neutral and shifts the highest volume node to the high of the day. So the point of control is the high of the day. What does that tell us? It tells us the market has yet to find sellers, because if it had found sellers, this is technically a weak high. Look at this. Let's zoom into this here real quick. I'm not trying to give you a long trader bite here, but when you have this occurring near the high, I know a lot of people have looked at this and said, well, this is resistance, it can't push any higher. I disagree. Every time when the market comes up and does not move away from price quickly, you do not have an excess, which means that sellers have not truly been found. The market is basically stalling into the close. And what happens is you move the point of control up, which means that there's a powder keg of energy building up near the high. It's not moving away from the high quickly, which makes it a weak high. A strong high is one that has an excess and has little to no volume, which means that we're likely to continue higher, at least in the overnight session. And that's exactly what we got. When we look at the overnight session, we've pushed to 2074.75, and that's what's expected on a neutral extreme. So I'm taking an opportunity to talk about this now because this is in real time. In real time, and you're seeing how an auction proceeds. Now, as I've said many times before, you can use fibs and moving averages and MACDs and ATRs and RSIs and CCIs and floor pivots and all that stuff. All of that stuff is fantastic as long as you master it, as long as it's your focus. That is great. It is not in conflict with understanding how the auction works and why prices move up and down all day long and what the purpose of the market is. And that is the core of everything that I've talked about since I've come online back in 2008. Just came out of just running a prop shop and started to share this information. Understanding the auction, understanding how gauging the auction's health using volume, and therefore volume profiling, which is my entire approach, is the way to gain a strong hand in your positions. Now, if you want to impose the pivots or fibs or whatever, that is great. Many people do. It does not exclude that. But understanding where volume is and having that in confluence with a floor pivot, a weekly floor pivot, a fib, a Gartley pattern, whatever it is that you're using, is, in my opinion, an extremely powerful edge as long as you master it and as long as you execute it properly all the time, which is where people fall on their face, and the reason I created or posted webinar 5. So that's how things are right now. Looking at the overnight session to get a gauge on Globex, and what we have is a market that has tested higher. It has opened, it has tested higher, it has completed, it has helped complete the auction. Look at how it tapers off as it goes to higher and higher prices. Unfortunately, we cannot consider that fully because it is in the Globex session and the 500 stocks are not trading that. So this market here in the Globex session is representing trading in sympathy with the Asian session and then later with the European session. But overall, the market has fallen and it's putting it's putting the high volume right up against yesterday's point of control. And what this market is saying, even though it's respecting the mid here on retests, what the market is saying is that there's nothing new to price in, and they are essentially in line with yesterday's auction. So this creates a little bit of an ambiguity when we open up. We are going to be opening in range. There is no value, even though the chart here shows the gray being value. Don't fall for that. The software is just programmed to take information and kind of put it up there. There was no value yesterday because we could not establish a balance. If there's no balance, there is no value. Okay, and so um, and so there's the opportunity here is for the market to open in a classic way, which means that which means that it's likely to open as an open auction in range. It is likely to test higher first and take out the weak high. I'm expecting the weak high to be retested. I'm expecting it to close this 2072 MC point of control that's still naked, and then I'm expecting it to fall back into yesterday's range and take a break, and then likely to balance into the session. That would be the primary hypothesis. The alternative, the alternative to that is the an open auction in range. I expect it to rotate down as it continues the auction from the overnight, rotate down into this 2060 area, bounce around, and then start to move up. And then I'm looking for it to breach the weak high and then fall back in, and then again get back into balance. That would be hypo 2. So hypo 1 is test the point of control at 69.50 and the weak high early, and then fall back into balance. Hypo 2, test lower early, find its buyers around 2060 area, 2060.50 or so, up against this point of control. And then for by the way, for hypo 2, for this run up, the execution is going to be leaning against this zipper here, or this balance here, this balance zone here. And so I'm looking for hypo 2 to test lower, then push up, then fall back in line. Again, it's a Friday. We've had quite a bit of range this week. Overall, and the overall range did not get extended. It still remained well within the most common range, which is 40 points on the RTH session, but it has explored pretty well on the downside and on the upside. Okay, so that's where things stand. I'm going to leave you with that. I want to remind you again, it is Friday, and so do not stake too much. Do not stake too much today. This is not a great day to try to catch yesterday's trend on a continuation. Just relax, control your risk. Don't go into the weekend with a really terrible set of trades. Do not lose your cool because you're coming into the weekend with a loss. Just stick to your loss limits, stick to your execution. That's your job. Let your edge play out. Your job is not to force your edge to play out. Your job is to let your edge appear and um, to take the trade and allow the edge to play out over time, just like they do with automated systems. By the way, if you did not see the video from the convergence event on Wednesday, it is linked in this video, and it's also on Twitter. It's an interesting thing because it's a parallel of how we should trade as individuals, in that we are simply looking to trade the probabilities of our edge, and that's your goal. Good luck, and I'll catch you Monday. Take care.